And it's really good to be here today, sharing some thoughts on very difficult question that Moin has put to me, especially because if I were to be honest, then my community won't be very happy with me. But nevertheless, as you rightly pointed out, in order to explain the whole situation, let me just try and share with you the perspective of the banking industry in Pakistan and a bit of a history. So in 60s, 70s and 80s, it was absolutely the public sector specialized institutions which did the trick for Pakistan as far as the infrastructure financing was concerned. But since 90s, the equation changed. These specialized institutions, due to lack of governance, evaporated. But at that time, their role was kind of split. The structuring piece, which is the most important piece when it comes to project financing or infrastructure financing, was taken over by the international financial institutions, and particularly the banks were very active then. They actually had a very thriving project financing teams on the ground, and then of course they could resort on their international connections as well to get the best examples to replicate. So Citigroup, ANZ Grindes at that time, even the World Bank was involved in HUBCO project, the structuring and all. That was all done. In the road projects, it was ADB, for example. They made a major role in terms of structuring. The funding piece also came from them, but the local funding was catered to by the local commercial banks. Then another wave came through. These international financial institutions exited Pakistan or depleted their operations. The commercial banks and then the commercial banks had to take the burden forward for doing the infrastructure financing. They lacked expertise. There is a serious problem as far as the asset liability is concerned. If you look at the statistics, only 1.2% of the total deposits are beyond 5 years, of the total 23 trillion that we are talking about. And then, it needed a better treasury management also, because if you look at the current and saving accounts, those are around 17 trillion. And we ran a regression on it, and we think that, a 50% of that could be used for a long-term sort of positions. So all in all, the funding pot was also merely, 8 trillion rupees. Today, if you look at the outstanding of the infrastructure financing or project financing, it's around 3.5 to 4 trillion rupees. So that pot of 4 trillion is still available out there, but the requirement is so mammoth for the future. And just to give you a sense, if I were to plot a 10-year GDP forecast for Pakistan, the requirement is around, and the backlog of infrastructure, the requirement is around 5 trillion rupee a year for project financing and infrastructure financing. Not going to happen through this kind of funding pot. And if I were to take into account the government's support there as well, we are talking about around 1.5 trillion coming through next year. In the last 5 years, by the way, and I'm including both the provinces as well as the federal government, the contribution was merely 8 trillion rupees in the last 5 years, which is nothing, and that's why you have a larger backlog available there. So all in all, the banks have not done enough, and I don't think they'll be able to do enough going into the future either, until and unless there is a real shake-up in the framework, and the incentive structure which is out there is put in place. When I say this, PPP structure, somebody talked about, the tax structure, the capital relief structure to the banks, all these have to come together, and then of course the ecosystem has to work. The bourses have to deliver as far as the secondary market is concerned. The pension funds have to participate. The insurance companies have to come through. But until unless we have the starting point, and somebody asked this question, or there was some discussion earlier, the starting point is to get that asset class right, and then the liability will be stretched on a term basis, and we can attract that funding from pension funds and insurance companies.
For having me here. It's a really important subject and conference. And I think in response to your question, I'd just like to state the capital markets are open and ready to provide debt financing, including for infrastructure, but for other purposes as well. And I mean, there are some issues, kinks, etc., that need to be worked out. There's some, taxation issues otherwise. But I think the basic problem has been, or the challenge has been, as Zafar was pointing out, I think the banks have been voracious in their appetite in investing in bonds, whether government or corporate, and holding on to them. If you see banks globally, internationally, in fact, long-term financing is all done in the capital markets. Banks don't have the kind of balance sheet and the kind of gapping that they would have to do 10, 20-year, bond financing. That's not the case here. So I think it's part cultural. I think capital markets and the banking sector for too long have been working in silos. Over the last few years, we've made a lot of effort, and I'd like to acknowledge the banks and the central bank, as well as the capital markets, that we've tried to break those silos down. And I'll just share two transactions when I said the capital markets are open and ready, as an example of what has happened and needs to happen much more. So some time back, the government did a large 200 billion rupee sukuk issue, and they had an offer for a bought deal from banks as well. With the SCCP's support, we were able to convince the ministry to do it through the capital markets, and the government saved almost 100 basis points in interest costs. That's 18 billion that, with apologies to Zafar, would have gone straight from taxpayer to the bank's bottom line. But the issuer benefited, the investors benefited. And the banks were still the major buyers of that sukuk, as you would expect. But it truly, the tail wagged the dog. Instead of 8 banks, there were about 70 investors that came in, including mutual funds, pension funds, HNWs, etc. And what the capital markets do is they provide a competitive framework, a competitive landscape for transactions to take place. The pricing will be what the pricing is, whatever the market dictates. But you need to have a process and a framework in which the issuer can get the best financing rate, and that's what capital markets provide. And as Dr. Shamshad, the PSX chair, makes the case always, there's no subsidies in the capital markets, right? So that's one issue, that there are a lot of subsidies that the banking sector provides, which distorts the whole, whether it's in long-term financing or short-term financing. So you asked about challenges. That's one challenge. I think the other transaction I'd like to quickly share is in REITs. Recently we had the first developmental REIT, and that's quite unusual. Even in most developed markets, most of the REITs are rental, not developmental REITs. And it was successfully done, heavily oversubscribed. By the way, as was the sukuk. The sukuk was 1.7 times oversubscribed. This was, I think, 2-3 times oversubscribed. And again, REITs is a really good instrument for a particular type of infrastructure development that can be developed and used, and the capital markets can be used, to provide such infrastructure financing. And I think the banks are also realizing that the kind of requirement there is, it cannot be, even if the banks wanted to, they cannot, meet that alone. Just the kind of housing schemes that were, being envisaged, the banks' balance sheets could not support them unless they were able to refinance from the capital markets. And I think the other really important aspect is, although we're looking at this from the debt side, is, one of the challenges that Pakistan faces as an economy is both a very low savings and investment rate. And as we bring in these new instruments in the capital markets, it also provides more opportunities, diversified instruments for savers, because for every investment there has to be a saver as well. So REITs provides an alternative savings instrument to investors. Similarly, bonds compared to bank deposits will provide a extremely good alternative to investors and savers. So I think if you look at it from both investment and savings side, using the capital markets really is essential. And many of the structural imbalances that we face as a country cannot be resolved if we all really focus and make sure that the regulation, as I said, there are some regulations. For example, recently the government has given tax relief to foreign investors investing in T-bills and PIBs. And that's fair, it's understandable, we need dollars, but that should be for all asset classes. You should not create a tax-driven incentive for investors for a particular asset class, whether they come in equities, whether they come in corporate bonds. If you're giving that to foreign investors, it should be there for all asset classes. So there are such challenges, but I think a lot of it is cultural, and we hope to work particularly with banks that they don't just do technical listings on the exchange. Because what happens in a lot of the corporate bonds is that there is a private placement done, and then they do a technical issue, because a lot of the investors require that it should be a listed instrument. Now, how you do the primary offering determines how the secondary market works. If the primary offering is not done through a proper listing process, then you will not find any liquidity. So even though it's technically listed, the banks are still holding on to all the bonds on the balance sheet, and it doesn't help them when they actually need to then use the secondary markets and the capital markets. It's not there. So my request to Zafar and to all the bankers here would be that it's in our mutual interest to really use the capital markets for long-term financing needs. Thank you.
Bismillahirrahmanirrahim. Thank you, Moin. Thank you for inviting K-Electric to this August forum. I think we have done well in terms of supplying electricity to a city which has 40% undocumented population, and it is extremely difficult to stop stealing and collecting what is due to us. With all this, we have reduced the losses from close to 36% to 15%, and recovery has gone from 80 to 95% the last year that we have closed. So when we started this journey, and it was prioritized in 2005, and we started in KE the second phase of, I would say, not privatization, but changing how we used to work, and you were part of us at that point in time. So I still remember at that point in time, Treasury used to tell Bin Qasim power plant what would be the flow rate of furnace oil, because we wanted to avoid a situation where the sludge is being captured by the pumps. So we used to tell Bin Qasim that your flow rate has to be 80 tons per hour, so that when we get pumping from PSO, we should have the machines still operate. This was the start. I don't want to go into a lot of details, but in 2015, we were given approval by US OPEC for $250 million for 14 years. So, a lot of hard work went into this journey. But I think the most difficult thing, or the most challenging part, was to show the lenders to have that confidence into gain. Again, the business itself is fundamental. In COVID times, while the entire industry and the commercial markets were closed, but we were still operating at almost 75 to 80% of what was supposed to be supplied at that point in time. So this is our business, and we have to ensure that we do what has to be done, and the banks have relied on us, including IFC and ADB. We We were financed by IFC in 2008, IFC and ADB together along with some ECS, and then in 2015 we tapped capital market, and I'm not sure how many companies in Pakistan have prepaid IFC and ADB. We did that through a sukuk, and again I think it was I would say as it was one of the best transaction of replacing almost $200 million of financing with a sukuk of 24 billion PKRs. So the confidence is created by the performance, but at the end of the day, I think the lenders obviously look at the business itself, because at the end of the day, electricity has to be supplied. Whatever is the growth rate, you still have to be available for almost 22 million people through 3.5 million connections, and if you do well, that confidence is there. And again, I would say if you look KE today, KE has a balance sheet which has the plant and machine, land, building, plant and machine, not the total of the balance sheet, at 450 billion PKRs. The investment plan which we discussed yesterday also in the same hotel in the conference is close to 500 billion PKR. So by 2030 we will be, I'm sure will be higher than a 1 trillion asset base. So we need, and if we need to be at that level, I would say the financing to KE itself would be at least 600 to 700 billion PKR. So now you understand the per party of the banks in Pakistan, and including the capital market. Whatever we have done the capital market, I think Farooq also talked about it, somehow the retail portion never comes. Although you try to have a blocked period also in which the banks cannot apply, but still the amounts that are subscribed during that period is very small, and ultimately when that shutter opens, immediately you get applications from all the banks, and it is fully subscribed. So what we need to do is to ensure that we are sustainable, and I think inshallah if we are able to do that, we will be able to tap all the markets, whether it is local banks, whether it is capital market, maybe retail bonds, perpetual bonds, sukuks, international bond, IFCs, ADBs, infrazamin. We already have a financing from Garanco, and we look forward towards doing more transactions of this sort, because if we need to ensure that the system is maintained and it is extended in case of demand, those cables and those meters, poles, transformers, grids, power generation, they have to be there. So this is I think the biggest challenge would be that we're going to continue to grow, and we need this financing to come. Again, the shareholders have not been paid a single penny in the last 17 years, so we need to do something about the shareholders also. They tell us that the management works for the banks in Pakistan and international institutions, because financial charges are often much higher as compared to what we could have given to them. So this is a huge challenge as far as we are concerned.
Thank you, Moin, and it's a pleasure to be here. So you're listening to some of the conversation that's happened earlier, and you can see that all the audience is sitting here, so clearly it's a very important topic that we're discussing at hand. From IFC's perspective, IFC has a current portfolio in Pakistan of about close to $1.3 billion, and it's spread across over 40 companies, debt and equity, more debt, less equity. And IFC is looking to actually scale up that investment over the next 3 years, and looking to double that. So, but the first and foremost thing, given the current environment, is obviously the macros. So the macro environment needs to be conducive. Given that we are, whether you're a DFI, IFI, so you're obviously longer term investors. So you can take a counter-cyclical view, and your mandate is to take a counter-cyclical view. However, what you do need is still that you should be able to foresee that the trajectory is upward. So I think in that context, when we're seeing the IMF and hopefully that SLA should get done, and we've taken some steps in that direction. And then after that, the reform that is necessary. I think that's some of the things that one wants to see. And then, the IFC is very keen to look at investing further, particularly on the infrastructure side. In fact, the majority of our portfolio is actually in infrastructure. I think no amount, and you've seen the kind of requirements, I think Zafar has pointed that out, other people have pointed that out too. You're looking at about 8 to 10% of GDP. That's the kind of requirement that you have on the infrastructure side. And those demands are tremendous. No amount of donor money or even public money, as in the government's money, because government is going to continue to face budgetary pressures, to meet their other requirements, is going to be adequate to fund these needs at all. And then in addition, you have obviously things like climate resilient investments that you need. So it is really important that you mobilize private sector to bring them in here. And then IFC stands as a development partner over there to help mobilize that and bring that in. But it is imperative that you now actually bring that in. And this is, I mean, my view is that an opportunity like this, when you talk about the macro side, and now that we're taking the steps to rectify that, never lose a good opportunity. And this is probably the right time for us to actually step in and build back better.
Thank you, Naz. I think great to know of IFC's continued support and focus towards Pakistan, and hopefully you will see things changing around. Naz, yeah.
Honorable Chairperson, Pakistan Stock Exchange, Madam Shamshad Akhtar, Maheen, CEO Infazamin, Asfar Hassan, CEO Nutshell. Distinguished ladies and gentlemen, Assalamu alaikum. I would like to begin by thanking Infazamin and its CEO, Ms. Maheen Rahman, for organizing this summit. I must say a timely and thought-provoking so far discussion. The timing and theme of this summit is very relevant considering the significant shortfall we face in the realm of infrastructure financing in Pakistan. When we talk of economic growth, especially in the context of emerging economies like Pakistan, the importance of infrastructure project is second to none. However, fiscal and public debt constraints remain a constant challenge. Therefore, in order to ensure sustainability of infrastructure development, it is critical to attract private investment in this domain. Maheen in the morning talked about aid drying up to the developing economies. Joe Meyer went to the extent of it's a blessing, and I tend to agree with her because challenges pose us to act and take it as an opportunity and come up with innovative solutions. So for me, it's a challenge, but at the same time an opportunity. Projects such as energy, transport, water, etc. form the backbone of economic growth, driver of long-term sustainable development. At each of these mega projects not only benefit millions directly, these chart the future course for coming generation by improving their quality of life. Add to this what we have experienced in recent years, particularly last year, in terms of the floods and the climate change. I think the need has further amplified in terms of infrastructure, focus on infrastructure. I'll slightly highlight the discussion since morning. For me, the focus primarily has been the origination, the assets, and the financing, and how the financial sector is geared towards shorter duration compared to longer term, which is required. But I think there's another aspect to it which is positive, is the structuring of the deals itself, which you let's mentioned in terms of how Grantco actually covers or attracts investors into it. I think that part will develop not only the governance and other aspects of the borrower, but actually help the banks, the financial institutions to look at the projects rather than at the entities. That's the traditional way of looking things in Pakistan. In terms of infrastructure, there are numerous success stories from around the world. Some of these were touched in the morning. In Pakistan, although some activity has been witnessed in this space, especially urban transportation, telecommunication and power sector, something which was discussed in the earlier session. It is a cause of concern that Pakistan's infrastructure spending is well below investment requirements of 8 to 10% of GDP. Governor State Bank mentioned a figure of 2.1% of GDP in the morning. So we are well below the global general benchmark. Moreover, as infrastructure projects are primarily reliant on government spending or by commercial banks against the government guarantees, the investment gap is expected to continue to grow. With the aid drying up and the fiscal space narrowing down and no future or a near-term respite in the sight, I believe the burden in terms of funding would be depending on the non-banking financial sector. Farooq mentioned in terms of 4 pillars: banking, insurance, pensions, and mutual funds. 3 of those fall under the purview of the Securities and Exchange Commission of Pakistan. I think I'm taking the whole summit in the even though it is focused on infrastructure, but in my view, we have to look at the debt market as a whole and look at the development. Reason being, it will free up the balance sheets of the banks, and this is where then the funding can be channeled into specific projects also, be it long term. There are a few positives, particularly in the context of pension funds. One of the provincial government has already decided and announced defined contributory pension system for new hirees. Mutual funds are already geared up for that. I think it's a matter of time. The other provinces, or even for that matter, federal governments may actually take that route. So that will develop a long-term pool for such infrastructure financing. When it comes to insurance, I looked at the numbers before coming over. Life insurance have assets close to 1.8 trillion, 1.1 is in government securities, and only 22 billion is into debt market. So a lot needs to be done there in terms of be it regulatory intervention or even the capacity building. BMA, Muzammal is here, at one point in time was the leading player in the money market and the debt market, but unfortunately over the years even the capacity is not there in terms of the trading and even the understanding of the secondary market trading itself. Therefore, the summit is very relevant to our current situation and future aspirations, as all stakeholders need to deliberate and address the issues highlighted today. The country's limited resources make it difficult to invest in infrastructure projects, while its regulatory landscape is complicated and fragmented. This is where the coordination between the 2 financial sector regulators and MOF, because throughout the discussion we've talked about debt market, but very less, or I think hardly any discussion has taken place in terms of the proverbial elephant in the room, and that is the government of Pakistan. We need to look at the debt office. We need to look at the NSS. What is their contribution? What needs to be done to restructure and channel those fundings into infrastructure or a longer tenor projects.
So the challenge really is, beyond the approvals that you need from government, is the project itself. And now we've worked with project owners for the last year and a half almost, and we find the same issues again and again and again. And what are those issues? Number one is the project has not been clearly developed in terms of its objective. So what is the purpose behind that project? If it's a residential community, and we've looked at affordable housing as well, right? Ravi is not affordable, but it's more middle income. But the challenge we found there, that there was a lack of fully scoping out the project in a manner which would bring it to the point of financing. So even before the financing could be put in place, all the bits and pieces that were required from project finance were not even in place. So specifically on affordable housing, the way we looked at it is we worked with a few developers who had experience in that area, who had clear land earmarked to them, either through themselves privately or through the government. But even then, we found that there were significant gaps in how they were going to be able to sell those houses to homeowners, how those homeowners were actually going to end up financing those houses as well. And then also, what was the actual structuring around the project? What was the debt requirement? What was the equity requirement? And so on and so forth. So the way we've handled that is to really bring in advisory channels to build that project up to be more bankable. Because even before we can talk about financing, we have to make sure that all the relevant points of the project are very clearly sort of outlined, the financial models are developed, and then you can go ahead and say, okay, how can we finance something like this? So I remember very early on in the InfraZamin days, we also worked with PMRC and a couple of banks to see, can we develop frameworks where we guarantee developers, where we guarantee the mortgage products, and just have banks as a sort of liquidity providers. And it's unfortunate that the affordable housing conversation never really took off in that manner. So where we are finding opportunity is in those very sectors where projects need to be developed. So once a project is sort of identified, there is a whole area of advisory that needs to come through before that project can come to the banking or to the capital market. And we've spent quite a lot of time working with project owners to build them up, to that level. So a lot of the work is in preparation. Once the preparation is completed, then the financing elements can take over.
Thank you, Maheen. Yes.
Today. Thank you so much for having me. And thank you to Maheen and the InfraZamin team for holding this really important infrastructure summit. I think it represents a really significant moment in the journey that you're making at InfraZamin to unlock financing opportunities for infrastructure here in Pakistan. And also huge thanks to the partners here today, to Pidge, Garant-Co, Infraco Asia, and Karan Das, not to mention the State Bank of Pakistan and the Board of Investment. Without the support of these partners, we wouldn't be here today to celebrate this next step on InfraZamin's journey. So you might well ask, what are we doing here today as the British government? Why am I standing here? What's our interest?
And yes, investment in infrastructure is directly linked to productivity and well-being. It's a beautiful book.